All right, welcome everyone back to another podcast episode of the Broker to Broker podcast. I'm your host, Marc Summers, founding president of AIM. Today, I'm very excited for the broker community, as I always am, when we get great people on here talking about their journey, what they've done. And one of those people that we have on today, you may or may not know him. He's very active within our community, but it's Phil Stevenson, who is the owner of PS Mortgage Lending. Phil, thanks for joining us today.
Thanks, Mark. Thanks for having me on.
No, I really appreciate it. So, I always usually like to start out with these podcasts with kind of hearing about your journey, and I know your journey because we've talked about it. We have a little run-up show here, but I think I'm going to go in and out of it. So if you can just start, give us your background on, if you were retail, if you've been wholesale the whole time, the companies you've been through, the way your business has changed. I'll let you take it away from here.
Absolutely. So, I started in 2005. I actually have a degree in economics, so the real estate was booming back then. I'm in Miami, and I was like, that sounds like a good fit for me. And of course, soon after, banks started going under and everything went down, but I'd never quit, stayed in it. 2008, I did a reverse mortgage for my grandparents, the first one I ever did. And then I joined a company that was learning reverse mortgages, doing a lot of Spanish-speaking media. I'm half Cuban. My mom is Cuban. My dad is from South Carolina. And so I speak fluent Spanish, and we did a ton of reverse mortgages while other people were getting out of the business or really struggling. And then 2011 to 2017, all we did was reverse mortgages. I opened my broker shop in 2012. Back then, it didn't matter with reverse versus forward mortgages, as we call them, where supposedly you were better off as a lender back then after all the changes. But with reverse, it didn't matter. You made the comp structure was different. And so I stayed as a broker. 2017, there were too many changes to reverse mortgages that I said, I can't focus solely on reverse. And so I got back into all mortgages. And in 2018, for a few months, I did become retail, a branch. My company just kind of unplugged and plugged into a branch lender model. And I was running reverse for the whole company. And it was terrible. These high P&Ls. I'm like, I know how to run my own business. I've been doing it for years. I don't need all this stuff. I actually found issues in their accounting. And the CEO says, "Are you an accountant?" I was like, "No, but I can see the issue." It's a whole nother story. So went right back before the year was even out. Never got rid of my license. Just came right back into PS. And here we are ever since. I'm glad through 2019 to 2021 that I was doing all mortgages because, we killed it. And having a good mix has really helped out.
Yeah, no. So talk to me about reverse mortgages. How do you really feel about that loan? I know they're still out there. I just really don't hear of anyone doing them. I mean, is it a good loan? Is it a bad loan? Was it just circumstantial of timing? Tell us a little bit about reverse mortgages.
So no matter what, so I've been doing it now 17 years. Funny, I was telling my wife just this week, I'm like, I'm 45 now. So I started at 28 doing reverse. And in 17 years, I'll be old enough to get a reverse. So I'm kind of halfway through that. But, there's so many misconceptions. And what I always do is I tell people, look, it started in 1962 in the United States. People don't realize that. Ronald Reagan made it part of FHA in the 80s. In 2000 is when they started with the counseling. In 2015 is when they started looking at credit and income. So there's been a lot of changes to it. But a lot of the misconception comes from what it used to be in the beginning. So back then, you would close on it, whatever your principal and interest was, they'd still take equity on top of that if you pass away or when you pass away or sell. So it was very different from now. Right now, it's just the basics. I tell everybody it's a mortgage like any other, has an interest rate, it's from a lender or a bank. It has to be paid back at some point. The difference is instead of taking the money out of your pocket, out of your checking account and sending it into the lender, the way we all do with our forward mortgages, with the reverse, you have the option of not paying. And if you're not making that payment, your interest adds on. It's deferred. That's it. There's no pitfall aside from that. If you don't pay your property taxes and homeowners insurance, they'll foreclose on you. If your house is free and clear and you don't pay your property taxes, somebody's in a bad tax lien and foreclose on you. So it's just highly misunderstood. And to this day, I fight misconception more than anything. My friend down the street, my boss that works for Chase or whatever, say it's a bad thing, don't do it. And it's like, well, what's bad about it? Tell me. Oh, he can't tell me. He just knows someone that had a bad experience.
Yeah, I mean, because I've heard I mean, as long as the circumstances are right, I've heard nothing but good things about it and how it helps out. We'll call it the elderly or available community. You know what I mean? People, I shouldn't say available, eligible community for that. You know what I mean? And there's many different payment structures you can do, right? You can take a lump sum, you can take individual payments, correct?
Yeah. The three ways: lump sum, line of credit, monthly payments, or any combination of those. I've had very few take the monthly payment guaranteed for life. One guy in particular is like, I don't trust myself. I want just that monthly payment. I don't want a line of credit. I want it guaranteed till I'm 100, whatever, if I get that far. So that's a cool aspect of it. The most popular is a lump sum to pay off whatever they need to, and a line of credit to access as needed. And the coolest part of it is that line of credit grows. There's no
with your equity, right?
Regardless of the equity.
Oh.
Your value can crash, but your principal limit, which is what you owe plus your line of credit, that entire amount grows. So I would say if you have two buckets, one bucket is what you've used. Let's say you've used 200,000 and then you haven't used 200,000. So you have a used bucket of 200 and an unused line of credit of 200. What you've used, if it's 6%, in a year you owe 212. 6% of 200 is 12,000. In 2 years you owe 224. By the same token, that line of credit that you haven't used will have an available balance of 12,000 more after 1 year, 24,000 more after 2 years. Now, what I'd really try to show people is that what you owe, let's say you pay that interest, that 24,000 in interest, you don't want your balance to grow because you want to leave it to your kids. Fine, pay it, but that 24,000 now adds to the line of credit. So now you have a $248,000 line of credit. So if you fall ill and you need in-home care, it's like a long-term care policy, so to speak. So it's a really cool aspect of it that most people can't understand and definitely can't articulate to clients.
Yeah. Now, I know what my next question is going to be after this one, but do you still do any of those mortgages, or is it kind of a thing of the past?
No. Now, is it the bulk of what I do? No, I don't do marketing for it anymore. It's more referrals and word of mouth. I still have clients that come to me from other mortgage brokers that even though they're brokers now and they can do it, they're like, look, I don't want to touch this thing. Phil, you take it. And I just closed one yesterday. That's a jumbo, 4.8 million value. She's had a HECM, a FHA reverse mortgage, owed like 900 something. And she pulled out an extra 1.5 on top of that. And she's going to go and invest it because she feels this economy, that luxury property in Miami is going to take a dip. So I had another one that did it with me 3 times. Jumbo also, Hibiscus Island, one of the islands between mainland Miami and Miami Beach. That loan amount was in the 4 and 5 million range. So every time she did it, she was dropping the rate by at least 1%. The last time was like 2020, 2021. So saved a ton of money, a ton of interest that was accumulating on the balance. So they wanted it for their business in Puerto Rico. So you have those people that they're desperate, they have no choice, they make $1,500 a month in Social Security. But then you have affluent people that are using this as a financial plan or a strategy in retirement. So yeah, we still see a good amount of them coming in, and actually more now this year than the last few years. I think people are feeling the tightening in the economy.
Yeah, no, that's fair enough. So the one good thing that you did is, and I always talk to people about how there are people that are very consistent in their business, but I always say you have to be evolving, and obviously you did that. So after many, many years, you really hit VA hard, correct?
I did. So when I came back into doing all mortgages, I said, I'm a veteran. I was in Afghanistan and Iraq from 02 to 04. I was a reservist from 77, from 99 to 2007. And so I was like, I want to make sure the way I built a niche within reverse, I want to build a niche helping veterans. So I put a focus in that. I put a focus in all my networking, talking about it. And I sometimes do the mailers that everybody hates, when veterans get this mailer for the Earl, but I take a different approach. It's a letter from one veteran to another, not, just a company saying, hey, here's a rate that I'm, trying to push on you. And so it builds trust in that, and they end up referring me and so on. So Right now, actually, in preparation for this, I looked up the last 14 months on Redder, and I was surprised to see that I've done more VA than conventional in the last 14 months. Just a couple of months ago, it wasn't that. It was conventional was higher. So, it's something that I've definitely focused on and been able to increase.
Yeah, no, that's great. I mean, first off, thank you for your service. I did not know you were a veteran. That's very, very important to me. My brother's one as well. But, with VA, the one thing that I've noticed about, helping start AIM and all this good stuff is that the VA loan itself it's on a trajectory right now that I've never seen before. Why do you think that? Because VA used to be a bad word. I mean, let's be honest here. If you talk to another realtor, they wouldn't accept VA loans. And I still don't ever know why. It's probably just one bad experience that, just kind of was a widespread. But why do you think the VA demand has grown so much?
So, like you said, there was a lot of misconception. And I was involved a lot in NMLS, National Reverse Mortgage Lenders Association. Then I got involved for a year in NAM before finding AIM and feeling like this is a better fit for me. But I was on the VA committee in NAM, and we actually went to DC and sat with the VA, the heads of VA over there, who were veterans, not just bureaucrats that have been there their whole career, and they really focused on the whole appraisal thing of appraisals take too long and all that. So they really built up the quantity of appraisers and locations, and then they set that 7 business day time period on it. So that helps a lot. I still fight misconception. I spoke to a listing agent about, she says, VAs always have stricter guidelines on repairs. I'm like, no, I asked them, well, are there termites? Is there termite damage? Because that is something we look for that you don't find in conventional and FHA. And there was termite issues. I think that's what she was talking about. But yeah, there's a lot of misconceptions behind it. And I just think that they're probably from many years ago when I wasn't doing VA, that things were slower and not as good.
Yeah. So with your business, I know you said you're in Florida and that's the bulk of your business, but you're also in Texas and Georgia. Like, how do you spread your name, your business, what you're about, the trust that you create? How do you spread that across those states?
So I do a lot of online, videos on social media and YouTube and things like that. And I've always focused on never stopping, even though I don't feel like I have this huge following. My YouTube's really picked up the last few months. But I think that helps build trust, even if it's not bringing in new clients. If someone refers you, they go and they look at that, telling people now about rates dropping, heading to the Fed meeting, and then they're like, we're going to wait until after. So I show them Loom videos of the charts, because I've been doing charts for years for my own finances, but also the 10-year, and showing them, look, it's a repeat of last year, and today's another example. It continues to go up the 10-year. So a lot of education. I feel that's our job, really, is to educate. Otherwise, you're just one of these call center guys that's just pumping out another application, trying to sell rate. And I think that's a big part of it. I've done the VA mailers in Texas. A lot of veterans there, and drop the rate 0.5%. It could make sense because their costs are lower than Florida. You've got to drop at least 1% in Florida. And I do have an MLO in Texas as well. So that's been the state I've kept most of the time. I've had 6 states. I was New York and California. I'll never do those again. Such a pain. I just added Georgia because my cousin and another friend moved up there, and then I found other people that moved up there, and I've closed several this year up there. So that was good.
Yeah, no, I mean, so one of the big things I know, and you can just hear it in your voice and the way you talk, is like you're an educator. You want, your people, your clients to trust you. What do you think is the most important thing in gaining trust with a past client or just a brand new client?
I mean, being honest, genuine. I'm sure I lose clients because of it. An example is I got a guy in Georgia that called the office saying he wanted a VA construction. I'm excited to do it because, we can do it. I called my rep at UWM. He was like, oh, yeah, it's easy for us. And so I was like, all right, I know I have a couple outlets for it, and called him. And then he asked me, how many have you done? I said, well, I haven't done any in years. So and he never called my office back and never answered my calls, but I'm honest. It is what it is. Maybe he found someone, like when people find me for reverse, found someone that does tons of those. Maybe Veterans United does, I don't know. So just being honest with people and letting them know the truth about rates are going to start going up when the Fed meeting comes. At least that's what we think, and it did happen. And not being, I told you so, but look, just for next time, follow what I'm saying, because I've been doing this long enough, and so on. So I think honesty is key, and just being yourself, not trying to impress someone or make something up. If you don't know the answer, go find out and then come back to them.
Yeah, no, I agree with that. I mean, and I've 200 some of these episodes, and like the number one thing that we always get across is that people want genuine people. They don't want, someone that they're not. They're going to do business because of you. Yes, sometimes it's because of your rates, sometimes it's some of your costs, but 75% of it is you being the person itself.
Right.
So with that as well, like one thing I want to talk about here is you've been through a lot of market shifts. Your business has changed quite a bit. What is, and we're going through more shifts as we speak. And you can say, some people can say, well, we're really not, but we are. We got AI, everything's always changing in our business. If it's ever the same, it's usually not that good. But with me saying that, like, what's one piece of advice that you would give to brokers across the nation that, need to get out of a rut, need to reevaluate their business? How should they do that?
So thinking back to downtimes, like that whole episode of when I got out of reverse and I said, all right, let me go be a branch of this lender. I lost clients. When I went back to being broker, this high performing realtor, who's still one of my best referral sources in Miami, called me and said, oh, you're not with them anymore. Okay, call my brother, because he didn't want to work with you with your rates at that time. So it was obvious I was losing business. I had to take out an SBA loan that year to be able to pick up marketing, get off the ground and everything. So, those types of things for broker owners are available for us, in hard times. To me, this increase in rates, this slowdown that we've been in, has lasted longer than I anticipated. I didn't think we'd be in almost 4 years of a slowdown. I felt it from the beginning of 2022. Hindsight, I probably should have cut my employees faster. I went from 8 employees to 3, but I did that in the second half of 2022. So I was treading water, making more money those first 6 months of 2022, gross, but netting nothing. So, acting fast, you need to act fast when you see things. And I thought I was going to do it this time after being through other cycles. But you got to act fast. You got to cut where you got to cut everything you can. And, so you can survive. Make sure you have that savings. If you don't have a savings in this business, you're going to be in deep water. And if you can utilize things like an SBA loan or a line of credit from your bank, do what you can to bring back business, if it's marketing or what have you, so that you can get through whatever tough times.
Yeah, and I agree with you. The last 4 years, it's not where anyone wants them to be. The only thing I like about it is it kind of weans out those low-hanging fruit people, that are truly call center people. But like I tell my guys all the time, hey, if we're slow or we're not as fast as we want to be, and we do 30-day marks, we're meeting and we're getting together and we're going to try to figure out how to go get more business and restructure everything we're doing. Because if you're not evolved in this business or changing what you're doing, you are going to get passed by.
Yep.
So what do you do in those situations? What's a moment for you where you go, I need to relook at things, and then bam, you change?
I guess the biggest one was when, reverse mortgage went through a big change in 2015 where they started looking at credit and income. So we had a huge drop off in clients, but still doing well. 2016, there was another change. 2017, they lowered loan to values based on not just your age, but also your interest rate. So the higher the rate, the lower the LTV. And that's when I had to say, we got to change, we got to pivot, and went back to doing all mortgages. So you've got to do that. If you're not learning about mortgage products like the reverse mortgage, then you're missing out. When I teach realtors about the reverse mortgage, It's the reverse mortgage for purchase. And a lot of people don't realize you can buy a house with the down payment and purchase contract and have the reverse mortgage at closing. Realtors say, oh, my clients aren't 62 and over. They don't fall into that. I explain to them, well, all of us have our reticular activating system in our brains, which filters out things that you don't, there's too much information for us to take it all in, so it filters it out. Like when you buy a new car, all of a sudden you see that car in the street everywhere you go. It's not that they all of a sudden appeared, it's that now your brain is opening that filter and letting that in. Well, it's the same with reverse mortgages. You say, oh, I don't get many reverse mortgage clients. But if you do network, if you're in BNI, if you're in Chambers, if you're wherever, and you start saying, hey, I'm looking for people that are 62 and over that might be having a hard time. Someone might say, my mom was just asking about the reverse, but we don't know where to go. So pivoting and learning and educating yourself to be able to do better and offer more to your clients is important. And I do believe you need a lot of experience for reverse mortgages because it's so nuanced to really be good at it, but it doesn't mean you can't write some and help people out and lean on your AE at the different lenders.
Yeah, no, you have to be learning at all times. And I remember when the DSCR loan kind of became popular again, I was like, I don't do any of those. And then I remember sitting up one night going, what am I thinking? Why wouldn't I try to educate myself on that? Because it's going to do when you have product knowledge, all it's going to do is open up doors for you. So when you do go to realtor classes, you can teach, you can give them advice. As long as you're honest about it, you can't go and saying, oh, I did 1,000 DSCR loans and you haven't done one. You know what I mean? Because that's just going to bite you in the ass. But, with everything I just said there and educating them, we're shifting into something right now where we're hoping lower rates are going to come, right? So what are you doing to get prepared for that hopeful little refi boom?
Well, I've been prepared in the sense that when I said I went from 8 to 3 employees, I kept my 3 best and most expensive, and which was a challenge because I kept thinking, I was like, 2023 is the bad year. 2024, rates are gonna drop. And I think Barry Habib was saying it too. Oh, we'll be in the 5s in the summer of 24, and it never came. And we've just seen these little fits. But so I made sure, it was an investment. I've said at times, I lost money. No, I've invested in my staff to keep these people so that when times happen, like right now, where we're very busy right now between not so much refi. We have refis, but it's not like over 50%. It's a small percent, 20, 30% of my business. We have purchases, we have reverses, we have a lot going on. And if I didn't have these 3 people there, I couldn't be on this meeting. I couldn't be doing a lot of the stuff that I do. Driving the client yesterday, that reverse mortgage jumbo, she couldn't see because she needs surgery. I drove her to the closing. I can't do those things if I don't have the right team behind me. And I guess a good recommendation is, and I know there's a lot of virtual assistant things within AIM being offered. One of my employees is a virtual assistant that I've had for years. 2, actually. The one, I don't count one of them. So really I have 4. I have one guy that does all my videos. He's a part-timer with me, and I've had him 6 years or so. Utilize that. Get someone, train them. When I started with that person, the former attorney who started his staffing agency told me, I was like, look, I don't know if I can do this. I don't have enough to give her. He says, one thing a day. Teach her one thing a day. And now she does so much. So you could start with just that and then use your contract processing team, if you need to, and then eventually get another employee. But, having that right support team is everything to me.
No, it's so important. There are people out there that do it by themselves, and God bless them. I don't know how they do it, but you need a team around you. You know what I mean? Like every successful person, or we should say more than 95% of the most successful people out there have a team around them. And one of the team members you brought up was video, and I want to touch base on that real fast. So many people are scared to do videos. Absolutely petrified of it, just to get on camera and talk. They don't like the way they look. They think they talk too fast. They think they talk too slow. They think it needs to be perfect. You do videos. We know that. You just said your YouTube channel is growing. What's one piece of advice that you would give to someone who doesn't like being on video or has never done it or just can't get over that hump?
It's never been a problem for me, and I understand when people say, I don't like the way I look on camera. but it's not about you. When you're meeting face to face with someone, they're looking at you. They're buying from you. So the same way that they buy from you face to face, they'll buy from you via video or listen to you and take that education. But it's all about trust. And I think more than anything, having those videos out there builds trust. It allows people to go in and see if they're like, who is this guy that someone referred, or this gal, whatever, and go in there and look and see who they are. And you see these videos and you're like, oh, this person seems like they know what they're talking about, or they do, like I don't do all the, look, I got a closing, but I just educate. And everybody's different. Some people love the key at the closing and all that stuff. And I hope that does great for them. But to me, it's all about education and hopefully building that trust that others can see.
Yeah, no, I mean, it's funny you say that. Like, people get so concerned about what they will look like on video, but then when they meet face to face a client, they don't even think about it. You know what I mean? And I love it. I'm a big video person. Like, shout out to Jason Frazier. He's got me on these gratitude videos and just checking up on people with videos all the time. And when you meet those people for the first time, they just have more trust with you. You're a real person.
Yep. Even now, I just posted one yesterday talking about how the drop last September is looking exactly the same. It was like 3 or 4 days up and then a sideways chop, and then it legged up again. And the last few days we've been in that sideways chop, and I said it to a client, and today it's legging up. It's like we find these patterns, so you can keep sitting there waiting for the next time. Might be 6 months. We don't know that we see rates this low. So even those that my face, I'm not talking in those. I've got my video editor puts little faces of me on the side just because I don't feel like getting in front of a camera all the time. But you can do a Loom video, and my video editor is looking for more people's videos to edit if anyone wants. It's not through me, it's directly to him, and he's awesome. So
that's great. That's great. All right, so I got you for a couple more minutes here. Once again, as always, I appreciate your time. You coming to Fuse this year? I don't know.
Yes.
Perfect. Okay, so let's say you're talking to a group of people there, whatever, and we have so many great people within our industry that go about their business different ways. Whether you're a big shop, regional, local, whether you're just more like referral, whether you're more buying leads, it doesn't matter. Like, what's one thing that you would love to get across to the broker community to either give them advice or basically tell them to get out of their own way? Like, what's one thing that you think as a community that we need to focus on? It's a curveball question, but a lot of times the first thing you think of is probably what you really want to say.
I mean, to me, I think networking, you want to build relationships with people. That's the biggest part that's residual income, I guess you could say, because marketing can get you somewhere. But if you're building relationships, those relationships will stick, especially if you nurture them. It's farming versus hunting. You need a mix of both. In my opinion, you need the hunting to get those kills immediately, and then you need the farming where you plant the seed, you water it, you let it grow, and then it bears fruit, and it takes time. Sometimes it takes months, sometimes it takes years. And when I come through times like this where business is booming, it's the hunting is a part of it. Like I was saying, like the refis, some of that is mailers, but then a lot of it is just people that I've known over the years that I've closed years ago, or realtors and things like that. So if you're not getting out there, having meetings, scheduling that, whether it means cold calling realtors, which I don't do, but some people do. I have a friend who did credit repair for many years, and now he's in the mortgage business. He actually does credit for NFL teams and everything. So I thought it was an amazing move for him. Unfortunately, he didn't choose to come to my company. He went with a family member. But I see him every day with new realtor meetings because he's posting them. I'm like, that's amazing. That's what you got to do. I don't have time for that right now. I focus on the groups that I'm a part of, and those give me fruit. But you got to have that right mix, whatever works for you. Maybe it's more cold calling than meeting in person or whatever, but hunting and farming, whatever mix works right for you.
I love that. I think you need to do both. You know what I mean? I think I almost want that to be the title of this podcast. You have to hunt and farm at the same time. Now, what portion you do and what portion you're successful at, let that dictate itself. But no, Phil, you were absolutely amazing today. I really, really appreciate your time. Your insight's always great. Look forward to seeing you at Fuse. And people out there, if you haven't gotten your Fuse tickets, go get them. The room block is done. We're working on more rooms, but I'm telling you, get there. It's going to be a ride. You get to talk to people like Phil. And, I can't wait to see you, Phil. I really appreciate your time, and thanks for joining us today.
Yeah, thanks. One more thing, though. Last Fuse, I wore something that got a lot of attention, and I think my campaign is still going. Don't get triggered by this. It says make rates low again.
Yeah, that's not a trigger for me. Hey, make rates low again. Everyone will be happy.
Everybody, even people that were like, I like that. I like that. So I'll bring it back this year.
Perfect. I absolutely love it. Phil, thanks for joining us. And brokers, if you want to catch up on all of our past podcast episodes, please head over to aimgroup.com/broker to broker. You can also listen and watch all AIM Network podcast episodes on YouTube, iTunes, Spotify. If you're on YouTube, the handle that we use is @AIM National for more great wholesale content. We have a ton of podcasts going on. We're trying to reach as many people as we can, along with, getting to know new people with all the relationships that we have. So do me a favor, rate our podcast, download it, leave a review. It helps us spread the word and proving to the world that brokers are best. And Phil, you're one of them, my man. And thanks for your time again today.
Awesome. Thank you so much for having me.